the consistent recurring SIP investings are outstanding. They're known to give better results. Idea is to be in the market, and to the extent that sometimes the questions are posed that the markets have run up in last 1 year or so. Is this a good time to investing? To which one of my answers would be: are you looking to be in the market for 3, 4, 5, 6 years? Then definitely. I mean, it's a bit difficult to time the market.
First of all, I want to thank Access Alternatives for supporting us and joining us as title partner for this event. And without their kind support, it would have not been possible for us to reach out to investors like you. So thank you so much for that. So let me have the privilege of introducing Hitesh. So Hitesh has joined Access Alternates in the year of 2022 as SVP and head of investments for listed equities and alternatives. So he brings about almost 2.5 decades of experience. And before joining Access, Hitesh held various roles, like he was a co-founder and managing partner with Lotus Capital. He was head of investments in PMS for Aditya Birla Mutual Fund as executive director and fund manager with Enam Asset Management. So he was on the sell side with Edelweiss. So he brings about 2.5 decades of experience. As far as his education is concerned, this is a lot of respect for him because he is an alumnus of Harvard Business School and he completed his advanced management program and investment management program with general management program from HPS. He has also done executive development program EDP from Wharton. And prior to that, Hitesh has also completed his education from Bombay University. Hitesh, one of the important thing that I want to particularly mention here about Hitesh is that he has contributed his research to a book co-authored by two Harvard Business School professors, Wall Street Research, and the name of the book was Past, Present, and Future, co-authored by Professor Boris and Professor Paul Haley. So, with that, I would like to thank Hitesh for accepting a request and taking the time out and agreed to speak to the investor community as a whole. So, over to you, Hitesh.
Thank you, Vikas, for the kind introduction. And my greetings to your viewers. And Vikas, I must just compliment the initiative that is being taken here today by you, and as you are aligning with others, because I strongly advocate and believe in investor education. And then these are the kind of forums that, when that happens. So I think we should continue to endeavor, having such events where investors at large get to know what is happening in the country, how the institutional investors are operating, what is the thinking process, and how to think about the future. This is the part where, if you think about next 1 year, next 2 years, as the other speakers are doing also today, I think it adds a lot of value to the listeners. So my compliments for leading that initiative.
Thank you, thank you. So, would you like to run your presentation? Because the topic for the day is how do you see post this government taking over? How do you see what's happening in particularly in mid and small cap space? And
Yes.
you have also decided to construct a new portfolio, which is an emerging portfolio. So, if you want to take your views on that, whether it is a good time to start the portfolio because you are doing so, over to you.
Absolutely. Yeah. So because I'll just stick to the fundamental of the matter first, which is that
Sure.
investing. Uh, I will just load my slide in a minute. In case we have any technical difficulty, I'll ask one of your colleagues to do so. But I will
Sure.
just share the slides to add from my end, and so on. But coming back to the core question that you posed, Vikas, just now, which is that investing. Investing is meant to be done at least for the medium term, and ideally, of course, for the long term. And by which logic, when you are in the market for 3, 4, 5, 6, 7, 8 years, and the magic of compounding begins kicking in, uh, that is the whole point. That is the whole uh, objective, that investors have been continually investing. And of course, if they are choosing to be on the mutual fund, then uh, the consistent recurring SIP investings are outstanding. They've known to give better results. Idea is to be in the market, and to the extent that sometimes the questions are posed that the markets have run up in last 1 year or so. Is this a good time to investing? To which one of my answers would be: Are you looking to be in the market for 3, 4, 5, 6 years? Then definitely. I mean, it's a bit difficult to time the market. Um, Let me talk about what are we looking for in the coming period of 24 to 29. Now that we have continuity with the present government and so on, let me share my screen and my slides with you. So what are we looking at? Just to dive into the presentation. Uh, that what are we looking for, right? So over the next 5 years, we have a very important landmark that is going to come in FY28, where there is a IMF and also World Bank forecast that India is going to be crossing $5 trillion in GDP. Now, we are already in FY25, and FY28 is not pie in the sky. It is not an aspirational number. It's just a bottoms up calculated number based on the momentum of the economy, how many various sectors of the economy are growing, how our incomes are growing, and so on. And therefore, it is something that can be relied upon to make a lot of investment decisions. I mean, also talking about 2031, 2032, the forecast is that India is going to be crossing $7 trillion in GDP. Let us think about the bigger numbers later, when we will be growing into a much larger number. But let us focus on, just 4 to 5 years, which is the consistent with the topic of this presentation, that what can we expect in the next 4 to 5 years. I just want to note that, we are going to have a landmark number of $5 trillion in 28, and then another 3 years landmark number of 7 trillion. In the manner of speaking, you know, uh, if you are on the next slide, when you look at the slide of dynamism of GDP growth, we are, all of us are very lucky people in one particular sense. As much as we are enjoying, loving watching India grow so dynamically, all of us have witnessed India crossing 1 trillion, 2 trillion, $3 trillion of GDP in just like, after this millennia, number one. Millennia started, number one. And number two, not before long that India is going to be crossing, 6 and 7 trillion dollars of GDP. So one, two, three, four, five, six, seven. And then what is also happening there is that inside in G20 countries, India was the fastest growing country GDP wise in the last year. That's a similar forecast in the coming year. And therefore, the point is, going back on the previous slide, that we are in a strong growth phase right now. Also, India's growth by nature, given the country's dynamism, given the country's vast number of listed companies across number of industries, these companies, when you look at very domestic oriented businesses such as FMCGs or infrastructure or so on, or companies that do significant exports like IT and pharma, to engineering and so on, engineering products, that is, or domestic engineering firms, the economy is truly dynamic, vast number of sectors being present, and the symbiotic effect that is taking place, meaning that when the fundamentally certain industries are present and growing, do the rest of the industries grow? And I will come discuss that point later. So in addition to having strong economic growth, the reality is that India's growth is very dynamic and multi-pronged, helping number of industries, diverse industries, grow. Number three is that we think that and there is very interesting McKinsey research done on this about 4 or 5 years ago, which essentially said that when dynamic economies expand, and there are examples in other countries as well, is that larger number of companies which were erstwhile kind of much smaller and so on, they are on their way to become much larger in coming period. And we have been seeing that, right? That a number of companies are going to scale up significantly in size when the next phase of economic growth begins, as we go from 3 to 5 trillion. um, I will also show you that when the economic growth is strong in India, the mid and small cap have tended to perform better. To those of you who have a question mark that is the mid and small cap run done now? Well, short term is difficult to forecast, but if you have outlook of 2 years and 3 years and 4 years, then the history has shown that every time that the economic growth, as we expect to see in FY 25, 26, 27, 28, is strong, will these mid and small cap do better? So that's the landscape we are talking about. Um, so India's growth, given that it is aided by the diverse number of industries, number one. Number two, that the strong government backing, both on in terms of government capital expenditure and our infrastructure built out, number of initiatives, and of course PLI is an important one at that. And as aided by the fact that the global supply chain, which is a topic that we have been talking about for a while, and generally in number of voices in the market have raised this, that the supply chain, global supply chains have been getting more diversified, de-risking, benefiting number of countries, including neighboring countries, and but also India. And therefore we think that the market has number of opportunities to pick from diverse number of players, as all these three trends on your screen get more and more momentum. In addition to the fact that the economic growth is strong and that India is having a tailwind through government capex plans, the PLIs, we are also having a cultural shift, attitudinal shift. What are we talking about? Is that from India's consumers, their willingness to spend is the new feature as versus just having ability to spend. In India, we have been growing our per capita disposable income by 10, 11, 12% a year, in that range. And then as we do that, uh, every close to between 4 years or so, we kind of feel very close to 50% richer. What that means is that every 3 4 years, and of course it's a gradual process, something that happens consistently every year and so on. But if you want to put a comma after a meaningful time gap, few crore families transition in higher income brackets. And what we have observed is that what that has done is that Indian consumers choosing to consume more premium products, choosing to consume and experience more premium service levels from the service industries. Industry after industry, take automobile for example. What are the defining kind of outcome that we saw in fifth, for example, in passenger cars, that SUVs are now 60% of passenger vehicle registration. They just used to be 34% 5 years ago, and they have gone to 60%. Given consumers' preferences to go in, better driving experience and so on. What about two wheelers? What companies like our leading two wheeler companies talk about is that it is their power bikes, that is what the consumers are more preferring. Their premium bikes is what the consumers are more preferring. What about real estate? Again, when you see per square foot realization, that is the trend again. When India is growing so much in our real estate sector, and people are purchasing new homes in the large numbers, what are we putting in these homes? How come our fast moving electric good companies are in the PE multiple of 35, 40, 45, which is significantly higher than before? We need more from more organized, recognized companies, be it our wiring, be it our switches, be it household white goods that we are purchasing, the brown goods, the stuff. Again, the trend of that of premiumization. What about textile? When you look at the clothing companies and so on, again, very similar. Um, our hotel industry, we have seen what has been happening. Travel and tourism as reflected in our Reliance stocks and so on. Um, by the way, even for alcohol companies, when you in what they have been emphasizing is premiumization. and the largest category in there is FMCG. Daily consumption item of almost every Indian. What's the reality there? Premiumization. So therefore, this has become a very powerful tailwind for companies to kind of exploit. Premiumization requires understanding of consumer. It requires understanding of uh, uh, market segmentation. It requires to have better brand communication, and therefore it is harder than it seems for company to be achieving this. It's difficult for any company to make you feel premium and to make you feel that you are using a luxury products. So the soft factors are there. So again, those companies which are creating better product, better experiences, are going to be winning here. And across many industries, we see this as a powerful trend, something that investors can pay more attention to. um, the third thing that is as a tailwind for India as a mid and small cap, as we think about what to expect between FY24 to 29, the time period that we chose to discuss about. India has made significant investments in digital infrastructure on the government side, which has got appended by, again, significant digital infrastructure that has been coming from the private side, and that has a lot of repercussions. Imagine, time period of 12 years ago, 15 years ago, and so on. If we wanted to go to any place of authority, and if we wanted to identify ourselves, what will we do? What we will do is we'll carry our passport copy, we will carry our PAN card copy, and there were times we will have some notary approve, put a stamp that this person is as he says he or she is. And that is how we have lived our lives for a long period of time. What has Aadhaar done for us? Now with Aadhaar and ongoing usage of Aadhaar and expanding its application, number one, in India, by the way, including even the bottom of the pyramid, we have opened what, 40 crore Jandan accounts. Everybody on this call and everybody we know, and people at large, we have undergone multiple KYC validations. On those layers, we have built our payment systems, our UPI, Bharat QR code. We have built, digital lockers and so on. When you have built this, when as a country we have built this, only on top of it, when there's identification, there's locational information, there is UPI, there is KYC, can we do digital banking? Can we do digital asset management, purchases of mutual fund, online purchase of insurance services, online purchase of number of banking products that we consume? And it is not just the soft products we are talking about. Only when such bedrock of digital stack is existing, there is a Zomato, for example, is there a Swiggy, is there a Misho, is there a Nykaa, is there a Policy Bazaar? And we can talk about a few more dozen companies here which are in reality unicorns. So um, so there's a very powerful impetus that will be continually provided by ongoing strength of India's digital stack. During the period that we have been building India's transition from 3G to 4G and now to 5G, during this period, more and more people have owned smarter phones, more powerful smartphones, and so on. Um, if we want to know where the value creation taking place, all we have to do is to look at our own mobile phones. It's a very valuable real estate. What apps are residing on your mobile phone? What work are you getting done? And that is where a lot of value is getting created, as we see in stocks markets and so on. So that is about the building of the digital infrastructure. India has been building 28, 29 kilometers of highways per day. In India, we have built significant physical infrastructure as well. We have been building. We are on the way to become a country with 250 airports. Uh, the road highway network, the state highway networks has just expanded significantly. We have been expanding our port capacity and so on, and our railway networks, electrifying the networks. As we do that, For example, what is the outcome when you are building 29, 30 kilometers highways per day? The outcome is it's good for construction companies, good for road construction companies. It is good for construction equipment makers. It is good for real estate companies because more and more areas are getting accessible. The metros which are passing through, and we in India we have over 50 metros under construction right now. Many lines are commissioned, and additional metro under construction are over 50 right now. Those metros, as they are passing through the heart of the city, they're also making more remote suburbs accessible, and often very near to important road networks, important railway networks, and then so on. What happening to real estate sector, therefore, and therefore what's happening to anything that is connected with real estate. Of course, cement and steel, sure, but so also the goods that we use. Like, just to repeat myself, the wires and switches and household goods and so on. I mean, the downward, the downstream positive effect of building infrastructure is powerful. So we have significant investments that are going to act as tailwinds when we have built digital infrastructure, when we are building the physical infrastructure, and there's also phygital nature of things at play. What do I mean by this? The companies that were doing only online, if you think of beauty product companies and the uh, uh, you know uh, frames, the reading glasses frames, and companies like Lenskart and so on. Originally, and by the way, there are dozens of them. The origin started as online only. Our jewelry companies, and there is physical present, and similarly, companies which are hitherto brick and mortar, they have added significant digital capabilities and become omni-channel. And there is value creation that is taking place by virtue of getting omni-channel, using the tailwind of digital infrastructure that is getting created. So again, very powerful tailwind. And when the large companies in India needed to build everything by themselves, then they have resources to do so. In reality, the mid and small cap are disproportionate benefit because they can now focus on their core business. They can plug and play for their digital requirements. They can plug and play for their infrastructure, requirements. No longer, they have to build their last mile roads and their own backup power systems, and power reliability is much better and so on. And therefore, overall, we are looking at a lot more efficiency and a lot more, surplus creating capability of the mid and small caps. Therefore, we think the tailwind are going to be beneficial in number of industries. We think that automotive, what we are talking about, 35 cars per 1,000 people in India, and we are making a transition from you know ICE vehicles, a slow, progressive, but a consistent, non-changeable transition to EV. Think about categories such as passenger car, and then followed by maybe two-wheelers to three-wheeler commercial, three-wheeler passengers. Higher and higher proportion of EV penetration is taking place. So that is one. Similarly, auto ancillaries can straddle on ICE, which is the internal combustion engine, petrol and diesel, and electric vehicles, and they can straddle on both. Again, taking advantage of the transition that is taking place. And then there is a strong export business that all these companies are eyeing for. So a strong tailwind across automotive, auto ancillary companies, and also, mind you, companies that fund our vehicle. It's a substantially large industry in vehicle financing that are going to get benefited. Of course, we are going to talk more about that when we talk about NBFCs and banking. Similarly, we continue to be bullish on pharmaceuticals and chemicals and specialty chemicals. 40% of the generic prescriptions that are written in the US are, sourced from India. And again, the factors are that Indian pharmaceutical companies have become much more powerful. They have been working for a while now to create in new chemical entities, doing authentic research right here in India. They have become a lot much more M&A oriented and doing far more complex, drug manufacturing and marketing as versus before. Again, strong tailwind there, and very global nature of the business. Similarly, if you think about what our chemical companies were doing in terms of size and capability just 10 years ago and 15 years ago, I mean, these companies have done an outstanding job of, migrating upwards in the value chain, getting more integrated, and the factors such as China plus one and PLI is really helping. But it's a great tailwind that is of recent nature. But these companies, on their own, over the last 2 3 decades, have just uh, dug their heels and become much stronger and much more capable. And going forward, when I look at next 5 years, both in pharma, in chemicals, in specialty chemical, we think that the number of small and mid companies will do really well. I just we are getting lot more diversified as a country in terms of our risk management about where the economic growth is going to come from. um, we are positive on companies that are doing digital. They rely on digital infrastructure growth. I named a few. You know, just to repeat myself again, whatever services online that been using, companies that are software as a service, platform as a service, again, great tailwind there. um, Companies that are doing FMCG, we think that in addition to the fact that when we are growing our per capita disposable income, and what happens in every economy after your roti kapda makan needs are met, then the distribution of the incremental spend as they go toward the lifestyle goods, FMCG goods, people want to purchase experiences. We think that number of categories that are going to have good tailwind there. So, and then fundamental rule is that growth needs cash. We are bullish on banking and NBFC asset management as well. Um, I have said, in words already what I have put on the slides. I will not get into detail. By the time, some key beneficiaries emerge, large, medium, and small, lot of work takes place at the back end. The origin, the genesis of growth happens much earlier somewhere else, and there's symbiotic relationships in businesses. So by the time when the origins of digital infrastructure investments are made, down a lot of work happens downstream in a number of industries in digital infrastructure, physical infrastructure, automotive mobility, ancillary, etc. take place. So our view is that our foundation as a country, in terms of our policy making, in terms of our laws, in terms of incentives, in terms of tax structure, uh, and in terms of just the promotion of businesses by the government, central and state, is so positive, and that is really helping the companies focus on what they are best at in terms of their exploiting their core competence and then scaling up. So then we remain rather positive. So, so these are the main reasons, and of course, the final one is that when you look at over the, I have put, I have data for a few more years than visible on your screen. Every time when you, for example, look at GDP growth in 2009, 10, 11, or then, again, 12, 13, 14, 15, whenever the economic growth is high, the small and mid cap, when you look at, 3 year compounded basis, kind of rises meaningfully. And when I think about the GDP growth that should take place in FY 25, 26, 27, 28, again, there is a reason for small and mid cap to do well. So there is no dearth of companies to pick from in India. There is no dearth of companies to kind of, anybody with research orientation, research mindset can kind of benefit from the trend that we talked about. Just to summarize, and because to close my remarks now, I think the fact that in India the economic growth will be strong and continue to be high, and that the fact that the growth is very dynamic. Our growth is going to be appended by the fact that the per capita disposable income that is growing, and beyond a point when that surplus is getting invested in premiumization, a trend that we are seeing across diverse number of industries. So there is going to be a strong tailwind. We have in India invested just a lot in our digital infrastructure, in our physical infrastructure. And when you combine the two, companies across market cap spectrum are getting benefited. But I would argue that mid and small cap are more because the larger firms had, ability to do the proprietary investments, but the mid and small caps are getting the plug and play capability based on the investments made. And lastly, when the economic growth was high for a period of time, mid and small cap has tended to do better, as the data shows. So with that, I'm glad to pause here, Vikas, and over to you.
Yeah, great. I think what you rightly said, there is no dearth of companies as far as Indian economy is concerned. And as the economy shapes up, you see more and more, mid and small cap taking the advantage of the situation and shaping up well. So, with that, we'll conclude the session here. Thank you so much. We have a couple of speakers coming from Access Alternates, and we've lined up other meetings also where we're going to talk about private equities. My last question, very quickly, if you can, throw some more lights on maybe in a minute or two, is can you talk to us about how do you manage funds under Access umbrella?
No, so in Axis Alternative, I run the Axis AMC AIF fund and the PMS funds. And yeah, idea is that in our brand equity portfolio, we focus on companies that are led by brand. So we have been investing in B2C brands, B2B brands, B2B2C brands, turnaround brands, and fundamentally experience shows there's a lot more resilience in brand-based businesses. The whenever there are ups and downs in the market, the companies with stronger brands tend to withstand any storm much better than companies which are more commodity oriented, or so on. And so that is what the brand equity fund does, and we have been focusing across industries in that fund. In our emerging star fund, which is our mid and small cap offering, the thesis is just what I just presented to you over the last 30 minutes or so. The idea is that how can we take advantage of the trends, and very powerful significant trends and the tailwinds of stronger economic growth, which are dynamic in nature. And because of symbiotic nature of the economic growth, we are just focusing on which are the foundational industries are benefiting, and therefore based on the which other industries can exploit those benefits, number one. And number two, which companies understand premiumization better, uh, and then make use of existing or make their own digital physical infrastructure investments. And then lastly, of course, that of the uh, focus on which are the businesses that will re-rate when you look at next 2 to 3 years, based on improved growth rate, which businesses are you are going to upward re-rate. So that is how we manage our funds.
Great. So with that, we'll conclude the session here. Thank you so much, Hitesh, for taking the time out and joining us.
Pleasure being you. Thank you so much.